stability and wealth for my family. But it's hard though when you're out there working 40 hours a week, coming home exhausted, and you can't even enjoy the prosperity and wealth that you provide. That's why I started trading Forex. So today, I want to show you how to flip your account to 6 figures. Everybody watching this video today, you're going to be able to learn how to flip your account and make this money. Guys, there's a lot of videos out there showing you how to flip accounts, showing you how to compound your money. But what I want to show you today is 4 steps to flip your account to 6 figures. All right? So the first step when you're looking to flip your account is don't overtrade. A lot of people out there, I see them posting their screenshots with all their profits and stuff, and they might have 20 trades open. And I'm thinking, man, somebody's going to get a margin call soon. To me, don't overtrade. That's the first thing, because I can help you if you make an emotional trade, you make an emotional mistake. I can help you if you get in a little earlier, if you get in a little late. But I can't help you when you've got 20 trades open and you can't control how much of your account you've already been used up. So the first rule to flipping your account to 6 figures is not to overtrade. What I mean is you should only take 3 to 5 trades per week according to this trade plan. 3 to 5 trades a week. Really, you should be taking 5 trades a week, okay? So what that means is you're gonna take 5 trades, all right? It's really just that easy. 5 trades. You don't have to sit there and look at the charts all day. You don't gotta sit there and put in trades all day long, every day. That's where a lot of people mess up. The second thing is that this is not about your win percentage. This is not about your pip count. This is not how many pips you get. What it's about is your ROI. In the investment world, that means return on investment. See, because think about it. If you go out there and you catch 100 pips and you brag about it, oh, I caught 100 pips, but you know, you was using 10-cent lot sizes or whatever it was, you know, you made $10, but I caught 10 pips, but I was using a $100 lot size because my account could handle it. Using proper risk management, using a higher lot size, and I made more money than you did, what really matters at the end of the day? How many pips you caught or how much money you made? Really? So what I do personally is I do 5% risk in every single trade. Okay? Now, what does that mean? It means that if you have $1,000 in your account, okay, 5%, okay, you times that by 0.5 or by 0.05, and you're going to come up with $50. Okay, so in a $1,000 account, if you're using a 5% risk plan, you can afford to risk $50, which means you've got to be okay. If I lose this trade, I'm saying goodbye to $50. You need to be okay with that. Now, I'll tell you, 5% is a little bit more aggressive. Maybe you need to do 1%, 2%. But whatever that percentage is, no more than 5, whatever that percentage is, that needs to be your percentage. You can't be all over the map with it. You can't go 1% one trade, 10% the next trade, because you're going to end up, your losses will wipe out your wins. Okay? You can't do that. 5%, 1%, 2%, whatever that is in every single trade. Okay? Now, say, man, that's a lot of risk. Well, here's what that really means. If I do 5%, that means I would have to lose 20 straight trades in order to blow my account, okay? Which that doesn't happen. If you lose 20 straight, you're doing something wrong. Rule number 3, and most important, risk reward. Because before, everybody wants to know how to make money. But before I can teach you how to effectively make money, I gotta make sure you know how to not lose money, right? So risk reward is very important. And in this case, what we do, okay, is in every single trade, no matter what, we take a minimum of 1 to 2 risk reward, okay? If the trade does not provide you a 1 to 2 risk reward, you pass on it. You pass on it. Hear me again. You pass on it. You don't have to take every trade that comes through. You don't have to take it just because it's showing some bullish signs or bearish signs. If the trade does not show you 1 to 2 risk reward, pass on it, okay? And then step number 4 is disciplined trading. And I'm going to show you what all this means and really how this comes into play. Disciplined trading, meaning I don't overtrade. I take a percentage-based ROI. I use a minimum of a 1 to 2 risk reward, and then I'm disciplined in all of this. Nothing takes me off of that trade plan. I don't care if the US dollar or the JPY or whatever is going to do the move of the century. Stick to your trade plan, okay? Now for the disciplined trading side and how to figure this out actually on the charts, let me take you to the charts. Come with me. Now we're going to take an actual look at what it looks like to put this trade plan into practice. Let's flip this account, all right? So step 1 is that we know we don't take more than 5 trades. Step 2 is that we know we have a percentage-based risk. Mine is 5. Yours could be 1, 2, 3, whatever it is. Just know that you need to use proper risk management. Don't over leverage. Don't use too big of a percentage, because of course you don't want to have too much risk. All right. Number 3 is that we do a 1 to 2 risk reward on every single trade. If it doesn't have that, we pass on it. And I'm going to show you what I mean by that. I've got some marks that I put on the chart for you. Okay. And now here's what this means. I'm not going to get too deep into strategy, but basically we have an extreme high right here, okay, based on this zone back here, and now we've come and we retested it, and so we have an extreme high set in the market. Come back here, we have an extreme low, the most recent, where the trend actually began, and so we use that for an extreme low in the market, and so now we know we have some movement in between. Okay, now so this blue line is going to represent our take profit 1. This is going to represent our take profit 2. And then this is going to represent the end of our trade if the market gives us that much. However, before we even look at anything like that, here's the really cool thing. I'm going to show you how to do this 1 to 2 risk reward. Okay, it sounds a little bit more complicated, but it's really not that hard. All right, so we're using a replay chart here, so just kind of showing you for training purposes. So let's move forward. We have this extreme high that we're ready to trade off of. We're going to go short on GU in this trade. We wait for the full retest. Okay. So again, this is a 4-hour chart, but we get our retest. All right. We get our retest in the market. So now we're ready to find entry. Now, this could be done off of different strategies. It could be done, several different ways. Okay. Now, we're going to do it based off of price action, and I'm going to show you right here where you actually get in, okay? Right on that red candle, based on this price action trading is where we get in, and based on a MA crossover strategy. So right here, okay? So let's go back one more. Right here at the beginning of this candle is where we got in at the crossover, all right? So let me hide these indicators just to kind of give a clear chart. If you measure using the pip measuring tool from the entry, right, back up to where the previous low was, the top of the zone, we have 128 pips. Now this is a swing trading, a long-term trade here. So we go just outside of that to make sure that we don't get stopped out, and we're going to call it 145 pips. Okay, 145 pips. So let's drop a line right there. And we're going to make that one, let's call that one pink. We'll do pink. That's going to be your stop loss, okay? This pink line is going to be your stop loss, and that is a total risk of 145 pips, all right? Now, let's look here. If I were to get down to where I'm thinking I'm going to get, right, down to the bottom of the zone, we're looking at 469 pips. Let's just say 470 pips. Okay. So with that being said, if I'm risking 145 to get to get all these pips right here, right? I'm risking 145 to get 470. That is more than 1 to 2 risk reward. In fact, 145 times 2, 145 is 1 times 2 is 290. So really, even if I were to get to the take profit 2, I'm almost there. Coming all the way down, I'm actually more than 1 to 3 risk rewards. So this is a beautiful trade setup. Beautiful trade setup, okay? So my stop loss, I can't set my stop loss. Let me say it this way. I hear a lot of people out there and they say, I use a 20 pip stop loss no matter what. I use a 100 pip stop loss no matter what. I use a 50 pip stop loss no matter what. You know what? You can't do that, because what if the market calls for more than that? You say, I'm going to use 20 pips. I'm going to use 50 pips. I'm going to use 100. What if the market doesn't tell you that? Or what if you're risking 100, but the market only calls for 20? Okay? So you can't tell the market what to do. The market's got to tell you what to do. All right? So based on my previous high, I go just outside of it, and I set my stop loss at 145 pips. My reward here, again, I can't tell it how much I want to make. I got to go back down to the beginning of my trend, find my extreme low, and I got to base it on that, okay? So in this particular case, it's 470 pips. So for me, I look at that 145 pip risk to a 470 pip reward. I'm in more than 1 to 2. It's 1 to 3.5 or so. So I'm all good. I'm in. This is a trade that I can do because it fits my trade plan. All right. So now I get in. Let's watch this trade happen. Okay. Here's the cool thing. Let's watch this thing happen. You get in, boom. You catch some quick profit. You go ahead and you set that first little take profit real small, but it gets you into some profit and it gets you some money in the bank. Okay. Now we start our move. It's retesting off of the zone here, and I'm just gonna kind of go real fast, and we hit our take profit. Now we have a take profit too. At this point, here's what's cool about this. You have a stop loss up here. At this point, you've already got 231 pips in the bank. Okay. You've already got 231 pips in the bank. So what do you want to do? You want to just leave it? No. You could use this stop loss and trail this stop loss up into here now. Now if it stops out, we're good to go. Or maybe you bring it back up here to break even or whatever it might be. All right? So now your risk is 0. Your risk is completely 0. Let's keep going. Guys, this is incredible. Right? Comes down, it hits my last take profit, or my take profit 3, for a total of 470 pips. I was risking 145. I got 470. Along the way, as we move down, I trail my stop loss into profit to make sure that I'm secure in the bag the whole way through. And that is good risk reward trading. Now, let me show you what this actually means money wise, okay? Because that all looks good on a chart, but let me show you what it means actually with money. Let's show you this calculator real quick, okay? So here we are, and we've got, let's say you have $1,000 account. All right, let's keep it real simple. All right, so what you do times 0.05 is going to give you 50. That's going to show you what 5%. All right, so let's say if you wanted to do 1%, you would do times 0.01. All right, which is a $10 risk. If you want to do 0.02, that gives you a 2% risk. In my case, I'm going to show you my trade plan. It's going to call for a 5% risk. It's going to call for a 5% risk, which is $50. Okay, so 1 to 2 means that if my risk is 50, my minimum reward is 100. Okay, so now let's just do 5 trades. Let's do 5 trades. Watch this. You got $1,000 in your account. let's say you have a 3-2 week. You win 3 trades, you lose 2. Okay, so you win a trade. You win a trade. Let's say you lose a couple trades. Okay. Now you win a trade. On a 3-2 week, you grew your account by 20%. Guys, that is percentage-based trading. Okay? Percentage-based trading. All right? You just grew your account by $200 in a week with 5 trades, and you lost 2 of them. Let's say if you actually had a bad week, because listen, we're all susceptible to be human, right? Say you have a $1,000 account. Remember, 50 is a loss. That's your risk, and 100 is a win because that's your reward minimum. All right. So let's say you have a really tough week in the markets. Okay, you lose more than you win. You win 2 trades and you lose 3. All right. So all right, man, you started off nice. You won a trade, cool. But then, man, you had a real tough time, and you lost 3 in a row. Man, I'm down in my account. You win 1 more. You lost 3, won 2. You lost more than you won, but you're up 5% in your account. Why? Because it's not about your win percentage. It's not about your pip count. It's about your return on investment. It's about how much you risk and how much you get reward. Okay. Now let's say you really learn how to trade. You watch my videos. You watch my strategy videos, and you actually learn how to really do some damage in the markets. Okay. Now let's say you have a 4-1 week, which is pretty common for me. Easy, right? You win a trade. You win another trade. You win another trade. Okay, you took a loss. You win another trade. You just grew your account by 35% in 1 week. Now let me really mess you up, okay? Let me really help you out for a second. Watch this. Let's say let's just show what that means for compounding purposes. You just let that account grow. Now you got 10,000 in your account, not just 1,000. You let that account grow. You've been growing it, return on investment, growing it percentage based for a while now. A couple months goes by. You got 10,000 in your account. Now, 5% is $500. Now your risk is 500 instead of 50. Times 2. Your wins are bringing you $1,000 a trade instead of 100. Okay, so you have 10,000 in your account. Let's go back to having that bad week. You lose 1. You lose another. You lose another. Man, I'm down $1,500 this week. You're stressing out. No, you're not, because you have a disciplined trade plan. You've been through this before. Because if you could bring it back with $50 trades, you could bring it back with $1,000 trades, right? Now you win 2. Oh, I messed that one up. Hold up. You win 2. Now suddenly you're up 5%, but 5% is $500. Let's say you have that good week, right? Remember that good week we talked about? You have a $10,000 account. Let's say you go 4-1. Win. 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 Loss. Win. Suddenly now you're having $3,500 weeks. How long is it going to take to turn this thing into 6 figures, guys? It don't take long when you're having big numbers. Now I can keep going up. I'm not going to, just for time purposes, I don't need to do it. But guys, when we talking about 6 figures, that happens when you have a $50,000 account. Now suddenly your risk is $2,500 a trade. Your reward is $5,000 a trade. 50,000 in your account. You have a 3 and 2 week. Okay? Or let's say you have a 2 and 3, a bad week. So you lose. You lose. You lose. You win. You win. In a bad week, you just had a $2,500 week. On a losing week, you just had a $2,500 week. On a week when you was having an off week in the markets, you had a $2,500 week, right? You guys can see the numbers. When you get in here and you start doing this $50,000 account, this $10,000 account, this $1,000 account, these numbers add up quick, and it ain't long before you get to those 6 figures. But it takes discipline. It takes sticking to the trade plan. It takes getting in there and making it happen. Don't overtrade. Do your thing. So guys, you can see how this thing can compound your account. Now let me just show you. This is the last little tool and the key to this, okay? Because it's not about your lot size, right? It's about your return on investment again. So how do I determine my lot size? Well, it's real simple. In this particular case, right? You had 145 pip risk. So if $50 is your total risk, divided by 145 pips, that's 34 cents. So there's no 34 cents in Forex, right? So you use a 30-cent lot size. All right, that's how you do that. You take your total risk. If you have a $10,000 account and you times that by 0.5, that gives you a $500 risk. You divide that by 145 pips or whatever your stop loss is, right? $3.44. Now there's no 344. So what are you going to use? $3.40 lot size, right? So it's real simple, guys. If you are using a 50 pip stop loss and you have a $50 risk, you use $1 a lot, $1 per lot size. If you have a 25 pip stop loss, you use $2 per lot size. So that's how you determine your lot size. It's not you just say, well, I'm taking $5 lots now. No, that's not how it goes. You don't determine this. The market determines this. And that's the key ingredient, guys. So I hope this helps you. 5 trades a week, 5% risk reward, or 5% risk in your trades. 1 to 2 risk reward in every trade you take. And if it doesn't have it, you pass, right? And then you stay disciplined. You stay on your trade plan. Let the market tell you what it wants to do, and then you go with the market. All right, guys, I hope that this training video has helped you. I know that if you follow this trade plan, that it's going to help you to flip your account, okay? Remember, step 1, don't overtrade. 5 trades a week is all you need. Step 2, 5% or whatever your percentage is, 1, 2, just percentage-based risk, right? Not pips, percentage-based risk, all right? Step 3, 1 to 2 minimum risk reward. If it doesn't have that, pass on the trade. There'll always be another one coming. And step 4, stick to the trade plan. If you follow this, you're going to be commenting later on about how you flipped your account, okay? And make sure you... Hey, what's up, everybody? It's Joe Genta here with Team Take Profits, here to help you trade and get paid. Tonight, in this video, we're going to have a really special opportunity for everybody in YouTube land. We're going to let you in on a private training session that I did with my team. This is for my team only. This is for people who have paid to have a membership to be a part of my Forex team. But tonight in this video, we're gonna kind of open that up for everybody. We want to kind of let you see what goes on the inside. So just an opportunity for you. Come check it out. We'll see you on the video. All right, so guys, thank you again for being patient with me. That was kind of crazy. I don't know what was going on with my computer, but the whole thing is still acting funny. So I really hope I don't get like
kicked off of here or something. But so yeah, so if you're here tonight, man, thank you for being on the call. And I want to say as I'm getting started too that I want to appreciate everybody being here over the last month or so, a little over a month. Some of you know we just bought a house and we just been so busy. I tell you, when you don't know how hard it is to move until you move. Oh my goodness. I uh I am just so done moving. So it's been a lot of work, a lot of stuff we've been super busy with. But Jay and I have been working on behind the scenes. So some of you guys have not seen me out front for the last month or so. But some of you I don't even know. I haven't even met yet. A couple of the names I've just been seeing in the chat. So I just want to kind of give you a little bit of who I am before we get started in the training. But when you look at Trade and Get Paid, when you look at Kingdom Currency Traders, Team Take Profits, I'm one of the leaders of the team. We've been building for about a year and a half now. Jay Wayne is like my right hand man. This guy is a beast. And so like we've been doing a lot of training. Paul Thomas is another one, this beast. And so anyway, we've got a lot of cool things that are happening in the team. Jay Wayne and I have been working really hard behind the scenes. Jay, you're still unmuted, right?
Yeah.
Man, tell them about some of these long nights, man.
Long
Man,
night.
this guy was at my house I guess a week ago now. We were sitting here putting in work, doing some videos and stuff until about 6 in the morning, literally. We literally put in a good 12 or something hour shift doing videos and getting some stuff ready for you guys' trainings and some of the things that Jay and I have been working on and that we're gonna roll out to the team in the next week or two. It's gonna be absolutely mind-boggling. You guys are gonna just be so thrilled to see what we have coming. So please, just stick with us for another week or two and watch and see in the next week or two what you see with training is particularly and with just some of the structured curriculum is going to just be absolutely awesome. So I see Clint is on tonight too. I want to give a shout out to Clint. That guy is probably the best trader I've ever seen. Honestly, I get a little bit nervous when he's on here because I'm like, man, I gotta teach, and I got an 8-figure trader on here. He should be one teaching this class, not me. But Clint, thank you for being on, man. You're a beast, bro, and I appreciate your friendship. But anyway, tonight we're gonna do some strategy. All right. I told everybody in the Trade and Get Paid thread, I don't want to do a bunch of setup. I know we have some new people on tonight, and that's cool. If you need help with setup, as far as getting things ready for your what do you call it? Your tradingview.com, tonight's really not for that. I want you to get with your team leader. You can ask a lot of questions in the Trade and Get Paid group or Discord, and we'll be able to help you with a lot of that kind of stuff there. So if this doesn't look familiar, that's fine. We'll get you there. But tonight I just want to focus on some strategy. Okay. I want to say this one more thing before I really actually get into the strategy itself. I've had several people that have messaged me in the last week or two that have just been saying, man, I'm frustrated, right? Do me a favor. If you have been in here trading, or if you're new or whatever it might, maybe you're not so new, but if you have been frustrated at all, have you ever traded and been frustrated? Just type 1 in the chat for me. Just type something in the chat for me. Because I know I'm not the only one that ever been frustrated trading. I know I can't be. So, all right. So I got a few people typing. Listen, I just want to encourage you. If you are frustrated with some of your trading at times, or let me ask you this: type 1. Have you ever felt like you're taking more losses than you are wins? All right, so I got oh man, I got somebody who just hit the 1 and just pressed it, held it. Listen, this stuff is part of trading, especially in the beginning. Let me just say before Anybody who told you when you came in here that you were never going to take a loss, they lied to you. Okay, you are going to take some losses sometimes. Clint is somebody who's been trading for several decades. I believe around 30 years. This guy is an 8-figure trader. He's an absolute beast when it comes to trading. And I guarantee you, if I ask Clint right now to get on the microphone and tell you if he ever loses a trade, there's no question that the answer is yes. He loses a trade from here and there. All right. I don't care who you are. If you're Christopher Terry, the CEO of IML, or if you're a brand new member of IML, you are going to take a loss from that. What we want to do is we want to minimize those losses. Let me get your mind right for a minute. A lot of people come in and they want to learn how to win, right? And that's good. Let's win. Let's get this money, all right? However, if you go and you win $10,000 in trades, but you don't know how to not lose, what's going to happen? You're just going to lose that $10,000 eventually. Everybody wants to know how to win. Everybody wants to know how to hit the big trade, right? But the important thing, before you learn how to hit the big trade, it's important to learn to not lose, right? We got to get our risk management proper. We got to get our mindset right. We got to get, we got to get to a point where we don't feel like we're missing out on a trade, that fear of missing out. Oh man, this could be the trade. Do I get in? Hey, Jay Wayne. Hey, Joe. Hey, Paul. What do I do? Is this it? Is that right now? Listen, stop that. This market has been going for a long time, and it ain't going to stop anytime soon. You ain't going to miss. If you miss a trade, there'll be another one, okay? If you miss out on a trade, that's all right. You're going to catch the next one. But don't feel like you got to go in here and chase the market. Don't feel like you got to come in here and hit a home run with everything that you do, right? Let me see. I got a message. Awesome. Yeah, thanks. I appreciate the message, Clint, and man, I appreciate you, bro, so much. And I'm definitely glad to be back and ready to start rocking too. But guys, we're gonna lose some trades every once in a while, but we have to learn how to minimize those losses, how to get our risk management proper, and how to make sure that we're not chasing the market. Listen, if the trade doesn't fit your certain parameters, don't take it. That's the bottom line. I can tell you I'm not going to get too deep into trade plan tonight, but I can tell you as part of my trade plan that I only take about 5 to 7 trades a week. Okay? And I'm not talking about my scalping sessions that we do with Clint or not like. I'm talking about my own trades, day trading type trades, whether they be swing trades or day trades, intraday trades. I do 5 to 7 trades a week. I see some of you guys, and I'm just being real, I see some of you guys posting your screen like, hey, what do I do about this or whatever? And I'm seeing 7 or 8 trades open at one time. I'm seeing some of you guys with 20 trades open at one time. And I'm thinking, man, this is crazy. Some of y'all going to catch a margin call. Some of you, that to me that just shows the inexperience of trading, because I remember I did that in the beginning too. Guys, we only need a couple of trades. We don't need to over trade, right? I want you to remember this. If you're taking notes, remember this. It's not about winning your winning percentage. It's not about how much money you make. It's not about how many pips you catch. It's all about the return on investment. And the only thing that matters, how much does my account grow at the end of the day, right? What if I catch 100 pips, but my account grows by 5%? So I'm like, cool, I made 5% on my account, but it felt good because it was 100 pips. But what if we catch 20 pips and my account grows by 10%? Right? What's better? You caught 100 pips or you caught 10%? Right? You could brag a lot about 100 pips, but 10% is paying the bills. Right? So at the end of the day, it's not about your pip count. It ain't about your winning percentage. Because let me throw that out for a second. Oh, I went 4-1. Oh, I won 10 trades in a row. But then on the 11th, because you weren't using proper risk management, you just lost all your winnings from the 10th. I've seen people do that so many times. They get into these trades They win 4 or 5 trades in a row, and then they say, "Well, man, I got it. I'm good to go." Right? I'm all pumped up, and so now they feel like they're winning trades. They're winning trades now. So hey, let's turn up our lot size. I think I got it. Man, I haven't lost a trade all day. Let's get it. 7 on black. Let's get it. And you get in there with that big lot size, and suddenly all the winnings you just had, you lost in one trade because you weren't using proper risk management. I want to encourage everybody. I'm not getting into this tonight. I just want to kind of throw this out there. I want to encourage everybody to get with one of our leaders. If you have not developed a trade plan that works for you, if you have not developed a strategy and a trade plan that works for you, I want you to get with one of our team leaders, Jay, Paul, myself, so get with somebody and let's develop your trade plan. Let's develop your structure, because without that, you're always going to be frustrated, guys. You're always going to be frustrated because I have to make money right now. I got another IML bill coming. Listen, man, don't stress about that. At the end of the day, $150 a month, you ain't gonna be thinking about $150 a year from now. I remember in the beginning, I was like, oh man, $150. A year and a half later, I ain't sweating that $150. That's nothing to me now, because I make that in a couple trades. Most of the time I make that in 8 trades. So I'm just telling you, I'm just being real with you guys. Don't stress about this. Don't think about the small peanuts. Let's think about the overall ROI. Let's think about the structure, right? Let's get your trade plan in place, and let's think of this thing long term. Don't think of this, where am I going to be next week? Let's think of this, where am I going to be next year? Where am I going to be in 5 years? Let's think of this long term, guys, because if you're looking at this trade by trade, every time you lose one, you're going to get discouraged. You're going to say, oh, I'm ready to quit. Don't do that. Think about it over a year's time. Think about it over some time, 6 months, and look back and say, I remember when I used to lose 3-4 in a row. And now you can be, 6 months from now, you might be saying, now all I do is win 3 or 4 in a row. Now I might lose 1 every 5. So think of it long term, guys. Let's get your trade plan in place, and if you don't have that in place, I just encourage you to get with somebody to help you with that. Feel free, again, if you need help developing your risk management, or if you need help developing your trade plan, please get with one of our team leaders, and let's help you get that. All right, that's very important to me, and it really should be very important to you. Now, as far as now that I've given you the commercial, y'all like, man, I wish you'd shut up about that risk management stuff already. I want to catch some pips, right? That's what everybody's thinking. Let me teach you how to catch some pips, okay? Y'all see this now? And now we're looking at, we're just looking at a basic GA 4-hour chart, okay? Now, all trading is done, your standard trading is done on a 4-hour chart. Anything less than that is considered a short-term trade. Anything more than that is considered either a day trade, or some can even be a swing trade. Anything more than 8 hours is considered swing trading. So what I want you to know, and I've taught this to my team before, but I want it to be very, very clear, and Jay's gonna be like, oh, here we go with support and resistance. You see these numbers over here? They're not there for no reason. These numbers over here are so important. Before you can figure out how to do a bunch of all this fancy stuff with all these indicators and oh man, I can do the 30-minute crossover like Jay Wayne, thinking like it's the new Steph Curry move, right? I could do the Bollinger Bands like Joe, like the rope-a-dope, we don't listen. Don't think like that. Before me and Jay Wayne was doing Bollinger Bands and 30-minute crossovers and all this stuff, we was understanding what these candlesticks were doing, right? That's the main understanding first. We got to learn these candlesticks, right? So if you can't identify a trend, don't worry about Bollinger Bands. If you can't identify what a support and resistance zone is, or a supply and demand zone, don't worry about Bollinger Bands. Don't worry about crossing over, doing all this kind of stuff. What I want to show you tonight is just some basic fundamentals, and then I'm going to give you a strategy to use, a simple strategy that you can make a lot of money with while you learn how to do all the fancy stuff, okay? Let me just tell you, these zones right here, the even numbers, is where I have it set up. 88, 87, 86, 85, 84. All right, these are called quarter points. These in a thing called quarters theory, these are called quarter points. Okay, these are price action supply and demand zones. When we look at the overall market, okay, if I drop a line, I want to show you something that's really cool. I'm just going to do this kind of randomly, and then I'm just going to prove a point, and then I'm going to show you what it means. Okay, so I just dropped 3 random lines. Let's pop these to some just let's pop these on some just even numbers. All right, so let's go. How about we go $1.85? Boom. Oh, I messed that boy all up. How about we go $1.85? All right. Now we're gonna go. Let's take this one. All right. Now let's take this one, and let's go. How about $1.83? And then let's take this one, and let's go. How about $1.87? How about let's do that. Now I did not drag and drop those, did I? I just put them on. All I did was put them on even numbers. Now I want you to look how important these zones are, though. Look back. Look back at these zones. Every one of them is in an indecision zone. Every one of them is in a place of support and resistance. Okay, so what I want you to know is before we can figure out all the fancy stuff, watch this. Okay. So here we have a trend, and we have some zones here, right? So now, just common sense. If we know it went down, it went up. It went down, it went up. It went down, what's it gonna do? It's gonna go up. Now, we know that we have a line right here, and we know that we have a trend line over here. So what's the likelihood? I'm not telling you exactly what it's gonna do, but let me ask you, is it kind of likely, you think? You think it could be kind of likely that it could go like that? Right? Why? Because down, up, down, up, down, up. Why? Because high, lower, low, lower high, lower low, lower high, lower low. So we should be forming another lower high. Real simple price action trading. Well, where can that lower high be? Well, I'll tell you, we have 2 places where I think it's going to go. We have a level of a real nice level of resistance back here, which became support over here. And we have a trend line, and then we have this right here, this quarter point. So somewhere in the middle there, I'm not saying it's 100%, but I'm saying it's pretty highly likely that somewhere inside of that zone is where we're going to see the turnaround, right? Why? Because I didn't even use any indicators. All I did was find high, low, high, low, high, low. I'm looking for the next high, right? So because I understand price action, I understand that I have a zone right here. I have a trend line. So what do I call that? What happens when I have all of a sudden I have multiple things happening in one spot? It's called convergence. That means when you have multiple places coming together, a trend line, a quarter point, and a zone coming all together at once, price action is going to have a real hard time breaking through that. Now, I'm not saying it can't, but if it does, we're looking at a retest and a bounce up. So what I'm saying is that it's pretty likely that somewhere in this area, we're going to see this price come up to right here on GA, right? Now, again, I'm not telling you to jump in a buy. I'm telling you that we have a strong likelihood based on price action, right? So that's without doing anything. Now watch this. Excuse me. Let me show you a couple of really cool things here. Here, let me get rid of that one actually. All right, you see this line right here? Let me make it nice and fat so you can see it. All right. So this is a simple moving average. This is just a standard moving average, simple, and it comes as a 9 moving average. That's price is averaged on the close of each candle. So type 1 if you have ever used a moving average before. Okay, I've got a few people that have done some moving averages. Cool. Very good. Very good. Very good. All right. So here's what's going on here. We know when price action is above the moving average, what are we looking at? We're looking long, right? We're looking buy. When price action is below the moving average, we're looking sell, right? Yeah, we got a few more ones. Cool. So here's the deal. We have price action that kind of has been going down. It's on a downtrend, right? And look at each time it's gone up. It doesn't necessarily just stop on the moving average. It'll come through, come down, come through, come down, come through, come down. Probably going to come through, which is going to be right in our zone again. So price action told me what the moving average is telling me before I ever even had a moving average on. The thing about a simple moving average, guys, is that just to kind of explain a moving average and what it does, a moving average basically takes whatever that number is. You can make a moving average by going to the settings menu. You can make a moving average whatever number you want it to be. It could be a 100 moving average. It can be a 50 moving average. It could be a 10 moving average. Standard is a 9. Okay? So when you put it on there, standard moving average is a 9. What that means is that it is taking the price of the last 9 candles, okay? The last 9 time frames, in this case 4 hours. Each one of these candles represents 4 hours. So 4 hours, 8 hours, 12 hours, 16 hours, 20 hours, right? 6 candles in one day. So what we're seeing here on a 9 moving average is that it's taking the closing price of the previous 9 candles. Okay, the closing price of the previous 9 candles, including the current average of the one that you're in right now, and it takes that number, whatever that price is. Okay, so the closing price of this candle was $1.8116. The price of this one, 1.81824. 1.82089. It takes all those numbers, the last 9, adds them up and divides them by 9, which gives you the average of 1.81713. And that point, wherever that moving average is at right now as it is the average of the close of the last 9 candles. So when a time period closes, it registers that price, divides it by 9 after adding it all total up, and it gives you the average of that time period. So over the last 9 candles, which are 4-hour candles, what's 9 times 4, guys? Right? 9, 18, 27, 36. So the last 36 hours, the average price of GA is 1.81691. So 713 really is where it was. The average price of GA over the last 36 hours is right there, okay? Because it was up here, now it's down here, and there's the average. You're always going to find the average generally right in the middle of where the last 9 or whatever your period is, 50, 100, 10, in this case 9. I want to show you something else. Now this is the same thing, right? Let me make it a different color. Okay. I'll make this one nice and fat for you too. So this one is basically the same thing.